Hi everyone, Ron here at AbleTrend. Welcome to the webinar. We'll go over some different charts from some different markets. And the software works equally well for all different markets because it's price based. So it doesn't matter if it's the price of corn or a stock or a futures contract, forex, currencies. It's exactly the same, and that's what's nice about it. You don't have to have different modules and spend extra money for all kinds of different time frames and different markets. It will work exactly the same, whether you trade 3-minute, 9-minute combinations, which is what we like to do for guidance charts, because we always use 2 time frames combined into one chart. That's what makes it so special and why it works so well, why everybody likes it. You just get so many less losing trades when you use a guidance chart, which again is 2 time frames and 2 different AbleTrend indicators combined into one chart. So that's what gives us a big advantage, especially in a really choppy market like the intraday today was, like for the S&P and NASDAQ and some of and crude oil and a lot of the day trading tips really choppy because it was a very flat, choppy day. You use like any other indicator, you get killed on a choppy market, just as we would lose too. But with the guidance chart, it keeps us out of trading most of those days, which is great because you can't win in a choppy market. So we get a lot of no trade zones where we get both red and blue dots at the same time, which I'll go over those charts. But the software works equally well for long-term charts too. It doesn't have to be day trading. Most people call up and that's what they, and order the software and buy it, and they just like the day trade. But you don't have to. The software works exactly the same for longer-term charts. Not everybody can be in front of the computer all day. If you're working or you're busy all day, which makes perfect sense, that certainly comes first. Use daily and weekly charts, because this way you don't have to be on top of the market all day long. It works just the same. You'll be in the trades for longer periods of time. Daily, weekly, you'll be in it for sometimes a month or 2 or even longer. Then you have like a swing trade chart, which is a 120-minute, which is a 2-hour chart, and a daily combination. And the reason we pick that is because a 2-hour chart works real well, and the daily is 6.5 hours because the market's only open for 6.5 hours. So we always like a 3-to-1 ratio between the 2 charts that we pick for the guidance chart. So a 2-hour chart and the daily works well for swing. But I'm going to show here a daily weekly chart. This is eBay, real popular stock. And what we're going to do is we're going to use AbleTrend 3 instead of AbleTrend 2 on the higher time frame. The reason is there's 5 days in a week. Well, we just said we wanted 3-to-1. We want the guidance chart to be 3 times higher. If it's too far away, like 5 times or 10 times, it's not really relevant because it's intraday could be moving up and down. You can still make some money intraday, but if the higher time frame's not moving or in a totally different direction, a lot of people, they put too many charts up. And they put daily and weekly and 1 hour, and it's too much. Less is more. A daily chart doesn't really have a big effect on a 3-minute chart. I mean, the market can still go, can still pick up a nice winning trade in the middle of the day, even though the long-term chart is in a different direction. So the point is, you can use it for different time frames. But for the daily, weekly, we want to use it. We always use AbleTrend TS on the lower time frame, and we use AbleTrend 3 on the higher, only on the weekly chart. Everything else we use AbleTrend 2, 3-minute, 9-minute, 120 daily, 10-minute, 30-minute. Again, you can pick anything you want. One doesn't work better than another. It's just whatever you like. I mean, that's the nice part about it. Everybody around the world uses AbleTrend for different markets, different countries, different time frames. It's all price-based, so the software doesn't care what it's the price of, or if it's every 3 minutes you're getting a new price or every hour. It's meaningless to the indicator. So here's a daily, weekly of eBay. You can see with the first blue bar with the blue dot comes in over here back in December, but there's still red dots above, so that's a no trade zone. We don't trade if there's red dots above. The whole key to the software is the dots. The red dots stop or block the prices from going higher. The bigger dots are the weekly that we just dropped on top of this daily chart. The whole chart here is a daily chart, but we've added these weekly dots, the bigger dots. This is the invisible support in the market. It's where there's like a hidden roadblock or a wall there that's going to stop it from going lower. The smaller dots is even more important. It's the daily dots. This is the the direction going on now. So when you have blue dots below, means you're in an uptrend, and the blue dots, as you can see right here, tend to block or stop the prices from going lower. The blue dots is the hidden support. We started that dot like 10, 12 days before that even happened, and the price came right down to that dot and stopped. Wow, there really was hidden support there that the software algorithm was able to pick up. So the key is, as long as you got blue dots, it means you're in an uptrend. Stay in the trade. You're safe. And again, it's the same rules. It's the same colors. It doesn't matter if this is a chart of a 3-minute, 9-minute of the NASDAQ. This could be a 5-minute, 15-minute of the euro. It could be a weekly, monthly of corn. It doesn't mean anything. It's the same colors and dots, and it's the same rules. So here's where we're getting in. There's your perfect sweet spot. We like when the bars pull back down. Green means sideways. Of course, we always want to get in closer to the blue dot. We would never want to get in if the price is way up here and the stop was, and the stop is always the second lower blue dot under the price. See, this one dot is slightly lower than these 5 or 6 small dots. So this is where the stop loss goes, always at the second row of dots under the price, not the first, second. The first row is our protection. It's our defense. It stops it from going lower. The prices break through that. Ooh, we don't like that. So we always put a stop loss at the second, which would be right here. So there's a perfect sweet spot. I mean, that's a textbook sweet spot right there. The prices pull back down, come closer to the blue dots, and they go from green to blue, from neutral back to potential uptrend. Ah, that's where I want to get in. Stop loss goes right there. So we're only talking about a 50 cent, maybe, it's a little bit more. It's about $1. About $1 at risk on a $30 stock, $29.50 stock, not much at all there. That's a great risk-reward ratio. We take this all the way up till we get stopped out right there. These blue dot is the second row of blue dots underneath the price. Here's your price, there's your support dots, and there's the previous lower blue dot. So we're stopped out here at 33.25, in here at 29.5. Especially if you're an option trader, you got yourself a nice little trade. That's a 10% move in 2 months using the AbleTrend indicator. What's interesting is here's a no trade zone. Perfect, classic no trade zone. We're not going to go short. Normally red bar, red dot, we mean buy puts. We'll go short. Not doing it. We've got blue dots below. That's a no trade zone. We're not going to ever go short if there's blue dots below. We're never going to buy if there's red dots above. Very important. It's kind of like really all it is. When everything is blue, like right here, blue bar, blue daily, blue weekly, triple confirmation. We're going to buy it, up it went. When everything is red, which it isn't, when there's red and blue together, like right here, that's what we call a no trade zone. Because it's just as important to know when not to trade as it is to know when to trade. And it's a good thing we didn't, because it eventually went up. But look how many times it hit the red dots and stopped. It's like, wow. There really was hidden resistance there. And again, it's the same colors, it's the same dots, no matter what chart you're looking at. If you can read this, you know how to read this one chart, where to buy and sell, and put your stop loss, you can now read any of them, because everything is exactly the same. Obviously, the dots are just in different positions, but it's the same colors and dots, same rules, everything's exactly the same. And I just also wanted to show this one, because the new blue bar and blue dot comes in right here today. So here's just, let's actually do that again. Well, you can see it right here. New blue bar with a blue dot. We had a new buy signal that came in today. So, kind of to give you a little bit of an inside peek here for those who don't have the software yet, that we've got a new buy signal on eBay today. Got a blue bar, got a blue daily dot, you have a blue weekly dot, no more red dots above. That's your buys, and it's only about a $1 stop loss, a little bit under this blue dot, because a lot of people will say, well, you don't have a second lower row of small blue dots. Well, that's true, because it's the first. We're in at the beginning of the trend, which is great. We're getting in right on the first day. So we're just going to put the stop loss just a few pennies under that blue dot. So you got about a little over $1 at risk on a $34 stock. Well, not much at all, but that's like 3%. So really, really nice risk-reward ratio, greatly in our favor. And the software is only about low-risk trades. And that's why you don't get a trade, all the time. Quite often you're in one of these no trade zones, and that's a good thing, because that's the time when not to trade. Let everybody else who doesn't have AbleTrend, let them all gamble and take a chance in high risk situations. So we have too many clients trading a lot of money. We're going to keep it as low risk as possible. Good stuff right there. Nice winning trade back here, and then we got a new buy signal comes in today. Okay, now we're going to move on to the crude oil chart. Got a 3-minute, 9-minute crude oil. This is great for day trading. Earlier this morning we had a buy signal, but again, red dots above, no trade. Here's your perfect sweet spot. Green bars back to red, right near the blue dot. So your stop loss would go right here. This one dot is slightly lower than these 15 dots in a row. So stop loss is just like about 10 cents under the price. So very low risk. Blue bar, blue 3-minute, blue 9-minute, lower time frame, higher time frame, no red dots above. I mean, that's just your classic perfect sweet spot. That's a textbook case right there. How did it do? It did really well, because we didn't get out till right here a couple of hours later, and picked up about, let's see, out at 45, in at 20, yeah, $250 per contract. Not a bad couple hours pay. If you're a multiple lot trader, as most of our clients are, we say take a little profit when the prices pop outside the bands. Those are good profit targets for partial profit. Scaling out. Some of our clients, trade quite a large amounts of money, 40, 50 contracts at a time. But if you're just trading a couple, there's a good place to take profit when it hits the upper band. If you're just a one-lot trader, which is what we say, start out slow. We're very conservative here. Want everybody, better yet, start out with a practice account. We keep it really, really low risk and conservative as possible in what could be a pretty dangerous business. So in here, out there, there's your profit targets. Simple stuff. No trade zone here, because we're not going to go short. You got these blue dots below. Good thing we didn't. It went up. They say, what about over here? This looks like a losing trade. No. The first two blue bars are right up at the upper band. We never start a trade when a blue bar touched the blue line. However, this one here, we don't want to be more than 10 cents away from the blue dot in crude oil on a 3-minute, 9-minute chart. Just too much risk. Just don't want to have a lot of risk, as I said. We don't want to get in when the price is too far from those stop losses. So we just use a 10-cent rule on crude oil, and I go through that a little bit more in the advanced webinar. This is the beginner webinar. Again, no trade here. So for about 2 hours here, we didn't have a trade. Definitely, we can take that here, and we're going to have a losing trade. Okay? No, that's okay. We're going to give back 5 cents. We made 25 cents on the first. We get back, losing. We lost only 5 cents here. There's certainly going to be some losing trade. There's no perfect system, that's for sure. So I like to point out, that there are going to be some losing trades too. I certainly want to point that out, because we wouldn't want to mislead anybody, that's for sure. Okay, another really good signal right there. Blue bar, blue dots. You're just about 10 cents away from the dots, so that's okay. Some people even use 15 cents, but if you want to be really low risk, use 10. And then this was a home run right there. Really nice trade, and this is, quite late in the morning. I mean, about a little before 11 o'clock Eastern time. We're gonna buy it, and we're out over here at about 1:25 in the afternoon. So about 2 hours we're in it, but you got yourself about 50 cents. Actually, it's a little more, but I'll call it 50. Actually, that was 45 cents. So that's $450 per contract. So got some nice things going on. No trade zone here, red and blue dots, no trade zone. Here's a buy signal. That's a legitimate buy signal at about 2:30 in the afternoon Eastern. Lost 5 cents on the trade. Actually lost 3, but I'll just call it 5. Exaggerate the losses a little bit there. So we picked up on the two winners was 60 cents, and the 2 losers was not even 10 cents. We'll call it 10 cents. So, pretty good day. I mean, that's 50 cents for the day. That's $500 per contract, just trading one lot. So, good day on crude oil today, just following a couple simple rules. That's all it is. I mean, the rules never change. The charts, the colors never change. The dots never change. They're just in different positions, depending on what you like to trade. Okay, let's take a look at one more here. Let's take a look at the E-mini S&P. Really ugly, choppy chart. And that's why I want to purposely show this, because this is where you really get the value in the software. I guarantee you, if you put 10 other indicators on here, you just get whipsawed and chopped up to death and you get crushed. Really would be a really big loss. With AbleTrend, half the day we weren't even trading because of this guidance chart, which keeps us out of some choppy markets. Not perfect, keeps us out of most choppy markets, which is why the guidance chart gives out so much less losing trades than if you were using any other indicator. So around 9:30 would be the New York Open, 6:30 Pacific. No trade, no trade. Finally, we would have a trade in here. Here's where the first trade would be. No trade here earlier. Obviously, red and blue dots, everything red and blue. We're certainly not starting a trade up here at the upper band. So the first trade didn't come till about 11 o'clock Eastern, which would be a buy signal here. And we only picked up about 2 points, but that's all the market gave us. Some days it just doesn't move much. Today was a really flat, narrow trading range. It was just short, little choppy up and down moves. Nothing you can do about that. If you're a multiple lot trader, definitely could take some profit there. It hits the upper band. Look how it touches the band, bounces off it, and goes back the opposite direction. Well, that's what usually happens, and that's why we say take profit if you're trading more than one contract when it hits the upper band, or lower band if you were short. Again, no trade zone here. Red and blue dots. Red means down. There's a big wall here. There's an invisible wall. We're not shorting it if there's blue dots below. Obviously, the same way we're not buying it if there's red dots above. It's too much risk. We'll move on to a different chart. Plenty of other things we can trade. Okay? Again, same rules, same colors, same dots, no matter what market you're trading. I just want to show you how you read the chart, so this way you can now apply it to your own, whatever you like to trade. As long as you understand where to buy and sell and put your stop loss, just take the same rules and move it on to whatever chart you prefer to trade. Obviously, everybody in the world likes something completely different. Okay? Now the buy signal here, it's about a break even. No trade here. And then we did have a nice little buy signal. It was right toward the end of the day. You know what? I'm not even going to count it because it was near the end of the day. But we did pick up a couple points here, 2 points, if you took that trade. But I can understand if you didn't, because it was near the end of the trading session. But the software picked it up. Whether you and I didn't, the software did. The software did its job and did pick up the winning trade. Blue bars, blue 3-minute, blue 9-minute. Everything was in perfect alignment. So, pretty good stuff. Here's a NASDAQ chart, really ugly looking chart. But the beauty of it was we hardly had any trades. From the open till 2.5 hours later, we didn't have a trade until finally around a little after 12 noon, which would be a little after 9 Pacific time. And it was a losing trade. You got in there or out right there. You only lost a point on the trade, a manageable trade. Nobody's going to get hurt. No, but it was a losing trade there. No trade there. You can buy it back here, and if you missed it for any reason, perfect sweet spot there. That's a perfect sweet spot. Green bars, back to blue, right near the blue dots. Super trade right there. Super low risk trade. Made a little bit, picked up 3-4 points on the trade, so that's okay. You'd be stopped out there. Another no trade zone here. And then toward the end of the day, as you could see, was a buy signal there. The indicator picked it up, but it was toward the end of the day, so certainly can understand. Alan, on the ES chart, we just start trading if the small blue dots are too far away from the blue. It's always 3 points, Alan, so there's no guesswork ever. On the ES39 chart, if the price is more than 3 points from the small blue dot, we have no interest. We go on to something else. We don't gamble. We only take low risk trades. So if it's more than 3 points on the ES39 chart, we move on to a different chart. We keep it simple. Welcome. Different Alan wants the 6E. Okay, let's go one last one. We're going to put up the 6E, which is the euro. I didn't think so. I don't trade that market, so I don't have intraday. I don't think we have that here. I mean, you can certainly get that if that's what you trade, but it's not something too many people trade. So I don't have that data feed. One of the very few I don't, actually, because we have just about everything. No, we don't have the intraday on the 6E. I can put up the euro dollar, which would be just about the same thing, but not that I can't put up the 6E. I could put up daily, weekly charts for 6E, or which would be just about the same thing. Let me pull up the euro dollar. In the forex market, it'd be the same thing. Okay, there's a 3-9 chart. Ugh, ugly, choppy day today. No trade here. Boy, just hardly. I don't see it here. Finally, here's a trade. Wow, hardly any trades at all on a 3-9 chart, Alan. Right there. Here's your sweet spot. No trade here because of the red dots above. Red and blue together, no trade. Red and blue together, no trade. Oh, actually, we can take it here. That's a sweet spot, which we would lost a couple of pips on right there. And then we got it back, and we'd still be in the trade now. This is a live chart. That's why it's moving up and down. So we would be in right here, your perfect sweet spot. Not touching it here. You're up at the upper band, way too far from the blue dots. But here's your sweet spot right there. Right there, anywhere in here. Blue bars right near the blue dot, triple confirmation, no red dot above. This was about 2 hours ago. Everything is lined up, perfect, low for a low risk trade according to the AbleTrend signals. And we'd be in it right now. And as you can see, as we're talking, it keeps on going higher. Went in about 20 points on that one. After about a 5-point loser, let's even call it 10. It's actually 5. After a 10-point loser here, we're winning 20 points now. Because we would be, well, here was the losing trade right in here. And there was just hardly any trading, which again, that's where you really see the value in AbleTrend. There's just hardly any trades when the market's choppy because the guidance chart, the two different time frames are opposite colored with colors, which red and blue being opposite. It means stay away, no trade. You know, I'll put it up against any indicator, any time frame, any day, and I'll certainly bet on it on AbleTrend signals versus everything else. But that's for you to see. We've got the 1-month trial going on. Anybody who has not had it, you're welcome to try it. And we'll definitely do the advanced webinar at this time on Thursday for everybody who has the software. Hope this was helpful for you. Thanks for being here. Have a good night, everybody.